Okay, so artificial intelligence. It's not some far-off concept anymore, is it? It's actually here, right now, rewriting the rules in finance.
Absolutely. We're seeing it everywhere. Banking apps, global investment engines. It's touching everything.
Yeah, a really fundamental shift. It's impacting, well, pretty much all corners of financial services.
hmm
Banking, lending, insurance, even wealth management.
That's spot on. It's quite the transformation.
And to really get our heads around this, we're doing a deep dive into AI revolutionizing financial services. It's by Dr. Pooyan Ghamari.
Right, the Swiss economist, founder of the ALAN platform. He's got that strong background in global finance and digital innovation.
Exactly. So he brings a really informed view. Our mission today really is to pull out the key ways AI is changing these sectors.
To give you, the listener, a clear picture of this quiet revolution and what it actually means for your money.
Precisely. So where should we kick things off? Banking seems like a good place to start.
Sounds good. Banking's definitely seen some big changes.
It feels like only yesterday chatbots are kind of a basic, right?
Yeah.
But Dr. Ghamari points out AI in banking has come a long way since then.
Oh, definitely. What's really striking now is the sophisticated conversational AI. These aren't just FAQ bots anymore. No. They understand context, they anticipate needs, they use generative AI that's the kind that creates new content.
Right, trained on huge amounts of interaction data.
Exactly, so they can offer genuinely tailored guidance. Think about getting advice on savings or investments that fit your goals or even managing credit.
All through a conversation. Wow.
Yeah, it's like having a personalized financial assistant on call 24/7.
Incredible. And speaking of real time, what about security? Fraud prevention must be a big area for AI.
Huge. AI's ability to process just massive amounts of data almost instantly. Well, it makes it incredibly powerful for real-time fraud prevention.
More powerful than the old rule-based systems.
Much more. Those old systems were static. Modern AI uses machine learning models. These things learn and adapt constantly from new data.
So they spot things humans might miss.
Precisely. They identify complex, subtle patterns in transactions that might signal fraud. Things a human analyst or even older systems would likely overlook, like a series of small, odd purchases across linked accounts.
Okay, so it's faster, more accurate.
And it protects both the banks and, crucially, us as customers. Minimizes disruption, reduces potential losses. It's a significant leap.
Definitely sounds like it. Now, something else Dr. Ghamari mentioned that caught my eye was inclusive credit scoring. How's AI helping there?
Yes, this is really important, potentially very impactful socially.
How so?
Well, AI allows for a much broader view of creditworthiness. It can look beyond just traditional credit reports.
Using what? Alternative data?
Exactly. Things like consistent utility payments, maybe mobile phone usage patterns, other non-traditional transaction histories.
So it builds a richer picture.
A much richer, more accurate picture, especially for people with limited traditional credit history, but who are, financially responsible in other ways.
That could really open doors for people in underserved markets.
Potentially, yes. Giving opportunities to those overlooked by older methods. It connects back to that idea of financial inclusion.
A real turning point.
Yeah.
And AI isn't just customer-facing, right? It's working behind the scenes too, like in compliance.
Absolutely. Regulatory compliance is incredibly complex and always changing. It's a massive task for institutions.
I can imagine.
So now AI systems can autonomously track regulatory updates, cross-reference them with internal policies, and flag potential non-compliance areas proactively.
Helping banks stay on the right side of the rules across different regions.
Exactly. It reduces risk and helps ensure they meet all the requirements.
Okay, let's shift gears a bit. Lending. AI seems to be bringing a lot more precision there too. Dr. Ghamari talks about intelligent underwriting. What's that involve?
It's basically taking loan underwriting from what was sometimes a subjective process and making it highly data-driven, a science almost.
Using machine learning models again.
Yes. These models analyze tons of variables, way more than a human could efficiently track. Historical transactions, employment stability, maybe even public data points.
Giving a more granular risk assessment.
Much more granular, much more nuanced. This often leads to faster loan approvals, more accurate risk pricing.
And potentially, like with credit scoring, broader access.
Yes, potentially extending credit to people previously considered too risky by traditional metrics. It's not just more data, it's understanding complex relationships within that data.
Right, like seeing a short employment gap differently if it's followed by consistent progress.
Exactly, contextualizing the data points.
Makes sense. So, a potentially fairer system. And does this detailed analysis help after the loan is issued? with ongoing risk management.
Definitely. AI continuously monitors loan portfolios, looking for subtle signs of emerging risk before things escalate.
Like early warnings.
Sort of. They can even run simulations modeling the impact of, say, different economic shocks on the portfolio. This helps lenders adjust strategies proactively.
Wow, that's powerful for stability. What about the less exciting part of lending collections? Is AI involved there?
Yes, it is. It's moving collections beyond just automated reminders. AI tools like sentiment analysis on customer interactions.
Sentiment analysis, checking the tone of emails or calls.
Essentially, yes, it helps lenders tailor their approach. AI can help figure out if someone just needs a nudge or if they're facing real hardship and need, structured support or different payment options.
So potentially a more empathetic and effective approach.
That's the idea. More effective, less stressful for everyone involved.
And one last point on lending from the source, continuous market awareness. What's AI doing there?
It's constantly scanning and processing real-time data, economic indicators, market shifts, changes in borrower behavior overall.
Giving lenders timely insights.
Actionable insights, yes. For instance, if AI detects rising local unemployment, a lender might tighten criteria in that specific area. Or if consumer confidence surges, maybe it signals an opportunity to expand.
So it allows for much quicker, more agile responses to market changes.
Exactly. Much more responsive.
Okay, let's pivot to insurance. Another industry that feels primed for AI disruption, especially around risk assessment.
Absolutely. What's really fascinating is the shift from static actuarial tables to dynamic AI models.
Dynamic how?
They're constantly learning from new data streams, granular climate data, behavioral data in some cases. This allows for way more accurate policy pricing based on real-time factors.
So my premium could change based on actual current conditions.
Theoretically, yes. Based on how often you drive, maybe local weather patterns, it's becoming much more individualized.
Very personalized. And what about claims? That's often a pain point. Is AI speeding things up?
Massively, for straightforward claims at least.
Mm-hmm.
AI systems can analyze documents, even photos of damage.
Assess the damage automatically.
Yes, and approve payouts, sometimes in minutes, often with little or no human intervention needed.
That must improve customer satisfaction quite a bit.
Definitely. Plus, it reduces processing times and cuts administrative costs for the insurer. A win-win in many cases.
But insurance fraud is always a concern. How does AI help fight that?
This is where AI's pattern recognition really shines. Fraud often involves complex links or repetitions that are hard for humans to spot in huge data sets.
AI can see those connections.
It can sift through vast amounts of claims data, find subtle anomalies, and flag suspicious activities for human review. It can even help uncover coordinated fraud networks.
Like digital detective work. Impressive. Dr. Ghamari also mentioned behavioral pricing models in insurance. Is that similar to the lending point?
Conceptually, yes. It means adjusting premiums based on actual policyholder behavior.
Example.
Safe driving habits tracked by telematics in your car could lead to lower auto premiums. Or maybe healthy lifestyle choices tracked by wearables could lower health insurance costs.
Rewarding good behavior, essentially.
And factoring in higher risks for others, yes, it uses that real-time data.
Personalization seems to be the thread running through all of this. Let's move to wealth management. That feels very relationship-based. How is AI fitting in there?
You're right, the human advisor is still key, but AI is significantly boosting their capabilities. Think robo-advisors.
Right, automating portfolio management.
Exactly, optimizing asset allocation, rebalancing based on market conditions. And for wealthier clients with complex needs, AI helps advisors build highly personalized strategies.
Tailored to risk tolerance, goals, market dynamics.
All of it. So it's empowering the advisor, not replacing them.
Makes sense. And AI is also helping understand client psychology, behavioral finance insights.
Yes, this is really interesting. AI can analyze data to spot common biases that hurt investment decisions.
Like fear of loss or getting overconfident in a boom.
Precisely. Recognizing those patterns helps advisors guide clients towards more rational financial choices. It acts like an objective check against emotional reactions.
A valuable tool. And given market volatility, risk oversight must be another area.
Absolutely. AI systems constantly monitor global markets, geopolitical events, economic indicators.
Providing early warnings about portfolio risks.
Proactive alerts, yes. Allowing for timely adjustments and protective measures. It's about anticipating issues.
And finally, in wealth management, the idea of deep client understanding. How does AI help there?
By analyzing a whole range of client data preferences, past decisions, spending habits, saving patterns.
To uncover needs they haven't even voiced yet.
Potentially. For example, noticing spending patterns that suggest an interest in sustainable products might lead an advisor to proactively suggest ESG funds. It's about anticipating needs and offering truly relevant service.
It really does sound like AI is bringing major advantages across the board. Now, Dr. Ghamari also laid out a kind of strategic playbook for financial institutions wanting to leverage AI effectively. Can we quickly cover those key takeaways?
Sure. He highlights four main areas. First, AI talent development. Institutions need to invest in educating and reskilling their staff to work with AI.
Makes sense. Better adoption, better retention, future-proofing the workforce.
Exactly. Second, ethical AI governance. Robust, transparent frameworks are crucial for responsible AI use and building customer trust.
Essential, especially with sensitive financial data.
Third, data monetization. Using customer data ethically, of course, to create bespoke products and services. That boosts loyalty and opens new revenue streams.
And the fourth.
Cross-industry collaboration, partnering strategically with fintechs, insurtechs. Those innovators can help accelerate progress and expand market reach.
So it's a holistic approach. Talent, ethics, data, and partnerships. Not just plugging in the tech.
Precisely. It's about building an ecosystem around AI.
Well, it's certainly clear from this deep dive into Dr. Ghamari's work that AI is profoundly reshaping financial services. We're seeing big steps in efficiency, personalization, risk management, even accessibility.
Absolutely. And this isn't just a momentary thing. It's an ongoing evolution, this quiet revolution, and it's going to keep changing how finance works.
Definitely. So maybe a final thought for you, our listener, to chew on. Considering all these rapid advances we've talked about, what core parts of the financial experience do you think might remain fundamentally human in the years ahead? And as AI gets even more deeply woven into our financial lives, what new ethical questions or considerations might we need to grapple with?